Coming up on 8:45 now, last month the Biden administration announced that it will cancel up to $20,000 in student loan debt for many borrowers. Many see the move as a win that could help lift the burden of student loans. For others, it's drawing criticism about possible inflation. Here to talk about it is Ernie Burns, financial analyst. Good morning, Ernie.
Hi.
So run through for us. It's $10,000 basically per borrower, but there are some caveats.
Yes, $10,000 per borrower, up to $20,000 if you have a Pell Grant. But they have income levels up to $125,000 for individuals, or for a married couple up to $250,000, and it should affect about 43 million Americans.
So some criticism is that it's inflationary. There's a lot of pushback, a lot of argument on both sides.
And we believe it possibly is, but we really don't know yet. The feds are saying it's going to be forgiven in a sense of because of the grants that were passed in 2021, the loan forgiveness. But overall, if interest rates, if inflation goes from 9.1 to 8.5, which it did last month, down to 8, that's going to be a win-win towards the markets. But in addition to, it also could have an issue with possible inflationary categories in the future if taxes keep going up.
Well, the politics of it is interesting because on the one hand you have people say, well, wait a minute, how is that fair to a trucker who borrowed for his 18-wheel rig, or a plumber who maybe didn't go to college, maybe he did, versus those who argue on the other hand, well, no, there are millions of people who have this crippling debt that they can't get out from under, and they can't really start their lives financially.
Yeah, and taxpayers are looking at themselves, are they paying for it? And the feds are saying no, but there's several states saying they're actually going to raise taxes to help pay for this.
Okay, let's shift a little bit, talk about inflation. 8.5% in the last report. The new one comes out, what, next week?
Next, the 13th, September 13th, and we're hoping that at least gets to 8, so we can see a trend that's going down every month. But we'll see, it's going to, if the feds look at it a few days later when they start raising interest rates, if inflation has not gone down, they're going to keep getting aggressive.
And it's funny, but I kind of laugh there with, we hope it gets to 8. Obviously, we hope it gets to 3.
Yeah.
But the point is, it's so ingrained in the economy right now that there's, it's going to be a gradual descent, you think?
Absolutely gradual. When you see it, the food prices, groceries, everything, gas tanks, everything has really risen over the last year and a half. We've seen steady inflation. So it's going to take a while for this to basically teeter down to a reasonable rate.
The Dow is up this morning 137 points, which is a little better than it had been 10 minutes ago. The markets are kind of just in a neutral position right now, kind of waiting to see what's going to happen?
Yes, there's not a lot of traders right now, and everybody's basically easing off because they want to make sure that if they're going to invest money, they're going to make money, right? And the market has had, let's see, the NASDAQ has had 7 days in a row that's going negative. That's the first time it's happened since 2016.
That says a lot, as volatile as things are.
Yes.
All right, Ernie Burns, thanks as always.
Thank you.